I know, and this is equally as unpopular to say that I don't think that gold has entered the big bull market yet. And then people say, but Henrik, it's up so much and you've been wrong on that. Well, I said, well, yeah, but if you look at GDX, so the gold miners, and you look at silver and you look at the at platinum also, you'll actually see that they have not performed anywhere near what gold has done. And normally, in a normal gold bull market, you'll see that silver is actually outperforming gold and is leading gold into that. And gold has not been up like 2, 3, 500%. That's not what we see right now. When you see the real bull market, we see 15x on gold. That's when we see, and that I think will come. But I think in that we, as you are saying also here, I think gold has been front running things a little.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Most of you know me as Triangle Investor from social medias. We are joined today by head macro economist and chief market strategist at Swissblock, Mr. Henrik Zeberg. Henrik, thank you very much for coming. Thank you for your time. Welcome to my show.
Thank you very much for having me on.
I watched a lot of your videos and I personally like your views on few hot topics. I want to start with the multiple bubble environment where we live in. Majority of experts and investors agree on the stock market overvaluation. Some saying the mother of all bubbles is Bitcoin. Some mention real estate, and we have a lot more, not just that. I want to hear your take on that. In your opinion, what is the biggest danger out there and could lead to a market crash?
Oh, yeah. What is the biggest one? I mean, I completely agree with you that we are living in a multiple bubbly world here, where we have bubbles a lot of places. I think um, I think is there. That's a tough one actually to say. I mean, it depends on where it's going to hurt the most. Normally, we will say that when you have a real estate bubble, that's something that really hurt people because then it's down to the very foundation where we live, and if you can see that that's really dropping in value, and of course, I think we have some of what of a bubble there, but we don't have the same kind of situation in the real estate market like what we had in during the crisis, the financial crisis. Because people don't own the same kind of housing houses here. They haven't bought two or three apartments just for renting those out or just for investment. So I think that that is not so much here. Where I think there is a lot of where we have a problem this time is where everything that is where we are with this valuation of stocks or whether it's private equities and so on, because we have seen the markets have been distorted for such a long time that when interest rates have been kept so low and we've seen all the stimulus coming out and all this, then we don't really know what should try things cost. And I think at this time here, it'll be a sequence of bubbles simply just starting to pop, and there will be a lot of pain around the world. I do think that private equity could be one place where we could see a lot of pains because I think a lot of private equity companies over the last many years have been going out and just buying different businesses up, new startups and so on, trying to find the next unicorn. And really, you're not really thinking too much about the valuation and just keep pushing money into it. So I think there can be a lot of pain in that area. But unfortunately, everything will very often hit the consumer, the ordinary citizens of any country. So I think we will all feel the pain, unfortunately.
Yeah, agreed. What about sentiment? What are you seeing and hearing about the current sentiment on the market by market participants, social media? What do you think are the expectations from the retail, and what are the expectations from the big money?
So in terms of whether we have a top or something like that, is that what
No, I
you're?
mean general sentiment, market heading.
No, okay, yeah. So yeah, we can see that the that people are buying up stocks right now with arms and legs in the U.S. and nobody has any fear on that. You simply can see that with the inflow of private capital flow into the U.S. market. So everybody thinks that the U.S. is strong and will not see any crisis, and that the market can go on, and we have had a soft landing. So I think that that is the that's one thing to observe, and then you can see that the corporate insiders, they are selling with arms and legs.
Yeah.
That's normally a good indication of that something is not really where it's supposed to be. And also my personal favorite, and Mr. Warren Buffett, he says, well, he's been moving out over quite some time now, and been collecting cash and still and sitting on that. And I think I will say that that pretty much sums it up. That when retail and ordinary people moves in and become so enthusiastic about any pet stock, and if I put something up about a potential top in one of these stocks, then people are all over me on Twitter, or X as it's called. And I think that's just a good indication of where we are, because when again I remember 22, when I was standing at the other end of things and saying I think we have a very strong bull market coming in front of us, and then people will just, no, we will not have that, and we're about to crash. So when we see this, and we see that with the retail investor, then we are getting closer to it. So the sentiment is telling us something as well. Absolutely.
Definitely. Are the central banks buying? Is that a signal for the upcoming economical reset, or is it just business as usual for the banks? What do you think?
So that when the central banks right now are, they are stimulating around the world now, at least, and we don't see that so much. So everybody's so focused on the Fed, but if you look across to the rest of the world, actually, you see that the actions that we have had across the world have been quite similar to what we see into any other crisis here. So we just need to look outside of the U.S. to actually see that the central banks are starting to see that things are maybe not as great, and I think it's a that the Fed here right now is the one that is the odd man out. Again, I mean, they normally are, and it's also understandable, because the U.S. is still kept up by this, that it's a safe haven, it's a safe harbor. So when things are starting to not be so good in the economy, people are saying, why don't we invest in something in the U.S.? I mean, U.S. stocks will be great. I saw somebody yesterday actually here in Denmark saying, I'm going to sell everything I have in Denmark and in Europe, because Europe just have zero growth, and I want to now put in my money into the US. But guess what? It's not like they have a magic formula over there, and that's why they can. It's because the money that from around the world is circulating into the US, and the largest bubble that you have at this point here in terms of valuation is in the US. So I think that people are moving to the to the US because of that, and again, that sentiment, that's normal sentiment, but right into the very end of things. And the central banks, well, the Fed thinks we have a strong economy. I am not too certain of that, and I think that they probably should look a little more to how the consumer is doing. And if you look to that layer, or that in that way of looking at things, then I don't think the things are looking great in the U.S.
Yeah, what do you think is the best way to navigate that kind of environment that is incoming? How to preserve capital or maybe even earn money in the process?
So I think it will be a very difficult path we have ahead of us, or journey, because I think what we it will not be similar to what we have seen before, and there are many reasons why I say that. But let me see if I can kind of lay it out in a way
Sure.
that is understandable. First of all, I think we are moving into a what would be a normal top in a market, and we can see that through that we have a weakening strength in the market in the S&P 500 and the Nasdaq and so on in the U.S. And that is actually what we normally see into tops. We have seen exactly the same setup into 2007, and people should actually just go look, do a weekly chart, look at a weekly chart, look at momentum, and then see what you see. You see the exact same setup. It's almost scary how similar they are. And then it's about I got your question. So you said, what was it again? Sorry about that. I got too caught off with my own explanation here.
No worries. My original question is
Protect,
how to
yes,
protect yourself in this
and the
kind of
whipsaw, yes,
environment, how to navigate
correct,
and preserve capital or even more earn money in the
yeah.
process.
Yeah, so I think it's about, first of all, that get out in due time here when we get into that top there, and then it's about understanding that when we then see the decline we're going to see, that will probably be something similar to what we've seen before. There are different ways that the market can decline. It can decline because you have what is called a deflationary bust, simply, which is what I think we were heading into, where markets have become overvalued, and then the economy simply can't support that kind of valuation no more, and then the economy rolls into recession and the market starts to tumble. That's one thing. You can also see what we saw back in 21, 22, where you actually have inflation starting going up, and that is where the market then worries about things, and then you have another kind of decline. What I think we're going to see this time around is that the deflationary bust is going to develop as we see it also, and we saw it in 2007 and 8 and 9. But I think that the Fed now will come out again, like what they did last time. And that's also what I'm told all the time. But Henrik, you have to understand that the Fed now has figured this out. They know exactly what to do. They just come in and they shoot their, big guns of money, and then things will be. So, Henrik, you have to understand that we're not going to see a crash. And I just have to think, I think otherwise, because first of all, I think the Fed is, horribly far behind, and that is going to create that crash. That crash in that part, just to get you how to protect yourself there, that is probably going to be a deflationary crash, which means that we will see and that inflation is going to plummet, and we're going to see that assets are going to plummet, so risk assets, and in that situation, there I think bonds will still be a good thing, a good bet. I think yields will come down strongly, and I think U.S. bonds and bonds from the Europe also will do well. Um, that will be government bonds, not maybe not corporate bonds, but that I think would be that in that phase. Then after that, and that phase will may not last more than, let's say, 6 months or something like that. After that, I think we should be more careful, because in the longer time frame, I think we have moved into what I say is a new inflationary regime. And why is that important? If we look at a very long time frame here, we can see that that inflation is going up and down, and the yields are going up and down with it over the very long time frame. And in 1981, famously, Volcker, the Fed chairman, killed inflation, as we said, by simply hiking rates, higher, and it caused a recession, and then inflation broke the neck, and then it started to crash. Well, I may see it a little differently, but anyway, but that's the story. That's a popular story. And then we've seen inflation ever since actually moving lower. What I think we've saw now with the COVID, where we saw the administrations from around the world coming out and actually overstimulating the economy at a time where the economy was actually in a supply crisis. I mean, people could not go to work, which means they cannot go and do the things and produce the products and so on, could not send the products around in the world. When you then, into that kind of crisis, you then pump stimulus. You guess what? It's the first thing you learn at economics studies. There's that there is a supply and there is a demand, and if you move one of those in one way, then you'll get a price reaction. And of course, if you're going to pump demand into a situation where you have supply, not adequate a supply, then you're going to get price increases. And that's why it was so weird for the Fed that we're going to see inflation, but not if you just, had intended, Econ 101. So, we got the inflation, and now the Fed is so terrified of that. I think now they actually, with that, what they did there, not just the Fed, but also administration from around the world. Also in Denmark here, we got, stimulus checks sending in,
Yeah.
money in the door, coming in the door. Um, that was an overstimulation at a time, and that can be, that is kind of, the equal of to what we saw back in 1981 with Volcker coming out and killing inflation. So we actually not we gave birth to inflation in that point. So we didn't kill it, we gave birth to it. And I think that is the inflation is something that is a strange thing. So it starts to move up again because people start to think, oh, we can actually have inflation. And that's when it starts to become kind of incorporated in the way we think. And that is what I think has shifted. And if you look at the charts, you can actually see that. So back to your question. When you then had deflation first, and you see the market is doing that, and the Fed comes out one more time and saying, now we shoot the big guns with a lot of money,
Yeah.
then I think actually you're going to unleash that inflationary regime again. And I think we're going to see inflation moving up over the next many years. And that means that then you need to start hedging for an inflationary environment. And you look younger than me or same age like me. I mean, we can't even hardly remember that time when we had inflation going up. I mean, we have seen ups and downs, but we see that it's been declining for the last. And if we, you and I have a few gray hairs, so can't remember that. I can promise you that 20 or 30 years old, they will not be able to understand and remember that. So I think we will see that people will then start to need to prepare for inflation and inflationary environment and take learnings from what was a good way of investing from the 1950s and into the 1970s and 80s. Not because we're going to get hyperinflation. People are always so dramatic and say, we're going to get hyperinflation. No, we're not. We're going to get a new trend in inflation going up, up, and up. And that is going to be a problem for a lot of people. So they need to understand that environment. So deflation first. How do we hedge there? We go with, first with the market needs to top first. That's the one thing. So that's, bullish assets, risk assets. And I think we're going to go to 6,500 on the S&P. After that, I think bonds will have a period, 6 months, 9 months, maybe more. And then I think it's about finding the right way to hedge for the inflation that is coming. And I think you're going to see a commodity cycle coming up where when inflation comes in, you can see gold and silver and precious metals in general, but also commodities will do very, very well. So that will be a third scenario, a third thing to prepare for. So I think this is the whipsaw that is going to be so difficult for a lot of people. And it'll be difficult to understand what's going on. And I mean, first, now we are a little afraid of inflation, then inflation will go away, and then of course, and then it comes back again. Markets up, down, it will be very, very difficult to navigate in. So unfortunately, I cannot just say go buy this because what you buy in the first phase will be very, very, wrong in the second phase.
Yeah, great overview. And gold is on everybody's list. My next question could be a little unpopular, but could the gold be the next bubble? History has taught us that whenever we see large masses enter one commodity, and when it's in the main topic in mainstream media, that those things could be the signs of the trend reversal. What's your take?
I actually think that I know, and this is equally as unpopular to say that I don't think that gold has entered the big bull market yet. And then people say, but Henrik, it's up so much and you've been wrong on that. Well, I said, well, yeah, but if you look at GDX, so the gold miners, and you look at silver and you look at the at platinum also, you'll actually see that they have not performed anywhere near what gold has done. And normally, in a normal gold bull market, you'll see that silver is actually outperforming gold and is leading gold into that. And gold has not been up like two, three, 500%. That's not what we see right now. When we see the real bull market, we see 15x on gold. That's when we see, and that I think will come. But I think in that we, as you are saying also here, I think gold has been front running things a little, and maybe the talk of inflation and people saying, oh, now it's time for gold. And normally that can, of course, bring push prices up, but it needs actually to be supported by the kind of economic environment we're in. And I don't think it will be supported by a deflationary bust. So I still think there's going to be a decline in gold. Again, gold has held up more stronger than I expected into. I have to say that, but it doesn't mean that you cannot see that strong decline in it. And gold, can crash 30, 40, 50% in a deflationary bust, and they can bring it down a lot. So just buying it here now, well, if you can hold on it for the next 2 years and you can accept that you may be down as much as 50% on it, then you're fine. But again, people can do that. But I don't think a lot of people like to go be down 50% before they see it. But so yeah, I'm with you on that. Goal has been talked up a lot at this point here, and I think maybe it's not just going to be a straight line, but coming into the next commodity bubble, and this is what I think some people also been, after me a little to say, well, Henrik, you're gold bear. And said, no, I'm not actually. I see that in the sound money environment that we will see at some point, gold will have a whole new place again, and that's a whole new position. And I mean that's going to send gold, skyrocketing into the 2030s. So we will see gold at much higher levels at that time. But short term, 1 year from now, I probably will not be holding gold.
If I read between the lines correctly, you are more bullish on silver than on gold, right?
I'm actually, I mean, I would say into that when we see the real bull market, starting, then silver normally outperforms gold, and that's not what we've seen this time around. So yeah, I would say that they call it the poor man's, gold, and that's I think it would probably see, a very very high a strong rally going into to that kind of environment. Let's say we are then year and a half out down the road, and there I can be very bullish silver and gold, and I think I will be even more bullish the gold and silver miners at that point, because they will be, when gold and silver go up and their cost will remain sort of the same or move up with inflation. Well, I think some of their price, the gold miners at that point will be fantastic, but they haven't been so far, and gold miners and gold silver miners have been, just been a drag over the last long time. Yeah, and it has not been good investment for the last many years.
Yeah, unfortunately not. What's your take on crypto? Do you see crypto as a factor going forward?
I have to say that I am kind of amazed, perplexed, or whatever, to see what's now going on with the with everything we see in the US these days here. I I'm not too sure that it's a healthy thing that you have an administration going in and supporting something where we know some of it has zero value. I mean, when it comes into some of these meme stocks, they have zero
Yeah,
value. I'm
yeah,
not saying it's a bad investment or bad holding at this point, but it's a zero sum game. That means that somebody needs to lose in order for you to win. That's the way it is. And for now, I think we can create that kind of environment where things will be, explosive in terms of. And I think what we saw yesterday coming out from the administration there and the executive orders, I think it's extremely bullish. I mean, it's so bullish I can't, hardly, fathom it how bullish it will be. But I don't think it's going to end well. I think it's going to end very badly. And I think we're going to see that now we'll have, like we've seen so many times with crypto, it is going to explode into a phase where, euphoria is going to drive it.
yeah.
And we're going to see that, yes, in 5 to 10 years, there will be some of these companies that, or some of these coins or tokens or whatever, that will have, a place in the economy, but it's not going to be. I don't know how many we actually have around today. Whether it's 9,000, 10,000, 20,000, or how many. There are a lot. Let's say that.
Yeah, a
I
lot.
think there will be some of those that can actually, yes, there will be a technology behind it. The blockchain technology will deliver something of value to real businesses out there, and I think some of them can be, the new Amazon or the new Google-ish kind of thing that we saw, 25 years ago, starting out from very lows there. I think that is absolutely plausible, but it's not going to be the all 10,000 of them. And I think that is normally what we see into bubbles. That is that, I mean, you can go back in time and you can look when the railroad came out in the mid 1800s. You actually saw that a lot of people were flocking into railway companies, and not many of those survived. But those that did obviously had a place and a role in the economy, because obviously a railroad is a part of the infrastructure in an economy and in a country. And likewise, I see with crypto, with the blockchain technology, I see that some of these will have a fantastic value. I cannot pick out the one that is going to have it. I would see that going into a crisis like what I think we're going to see. I think you're going to see crypto, get absolutely destroyed. There will be some that will then stand, and picking those out from that, you know, when there's blood in the streets, will be in a fantastic environment, a fantastic opportunity. If anybody can find that one, please give me a call, or write to me on which one it is, and please don't write to me on anything. But if you have something fundamentally, I would love to hear about it, on why that particular technology would be fantastic. But I still think all of them will get crushed into that scenario, and even into the deflation, so the stagflation that I could see we could develop also, which would be the commodity boom also. Not certain that we will see crypto do well there, but I have to say that even though we see so much support now coming from the present U.S. administration, that doesn't drive the economy down the road. And I have to say, I want to see which ones can be really have business values in 2, 3, 5 years time, and those could be fantastic picks for the future. But 99% of the rest probably going to end up, being forgotten in 10 years' time.
Yeah, yeah. You mentioned Trump new policies. He issued a barrage of executive orders kicking off his presidency with a muscular use of power intended to signal a sharp reversal from existing policies on issues including immigration, the environment, climate, and energy. Do you believe that that sharp turn here could lift the US economy in the short term and in the long term?
I have heard nothing that has come out that will. I mean, I've seen something about making the U.S. the AI capital or something like that,
Yeah.
and that's fine. I think that's fantastic. I mean, AI, machine learning, all these things, robotics, and all that is going to power the next industrial revolution. So we're going to see a fantastic progress in the world after this crisis here. But I don't see anything that is going to change the path that we have right now in the economy. Absolutely not. One thing that I've said also, and I said on X several times, is that if you impose tariffs, you're putting inflation into the system. That's the way it is. And then you try to see, no matter how you try to do it, it's going to hurt the consumer down the road. So I think it's a bad idea. I think growth and I think trade between countries is what we need, and obviously there should be some rules around that. But we seem to find that out in Europe, and we have seen good growth and also new companies in new countries coming in. Obviously, Europe has still some issues there, but I I don't think I've seen anything on the executive orders that is coming out that I said, well, this is just going to be fantastic and this is going to change the whole agenda. I haven't. And if they're going to cut, I mean, there may be inefficiencies in the U.S. System and the whole administration there, and the Doge department is going to do something about that. Well, it could be, but if you start to cut any jobs with that, it's having a negative impact to the begin with. So you may create the setup for a longer term, more efficient setup, and I think that's fine. And the use of technology and the use of AI and all that, absolutely something everybody, all countries around the world should do. But something you need to do, and change, takes time, and transformation takes time. So going out, cutting a lot of people will hurt. Going out, throwing a lot of people out of a country where even though they may not have the status that is required, which is not a good thing. I agree with that. But if you push people out that actually have to hold jobs and pay taxes, it's also not a good thing. So there'll be downsides to all of these things. So it may feel good in the stomach for some people, but it's not the same as it's a good thing for the economy.
Yeah. Henrik, final question. Name me five commodities that you are most bullish on and five commodities that you are most bearish on.
Oh, this is difficult. I mean, I'm not sure I can. Again, now I'm pushing myself into the situation where we have when the commodity cycle then really should start. Let's say in a year's time. I would say all precious metal will do good. Silver and gold also will do fantastic. I think there will be. I have an idea also. I don't think uranium is something now that is right now again. We have to. I do actually think we could see quite a decline there as well. So I think that can do fantastic also. And oil. I mean, I have to say it. I mean, the world still runs on oil. The oil is still so
Yeah.
as important factor in the economy. So oil will also do well. But obviously, if I have to pick something out, then maybe coal will be of something that we're not be looking into because of the green,
Agenda.
movement that we still have around the world, and there could be others like that. But I'm not sure I can pinpoint out, exactly five that I'm mostly bearish on. I think every commodity will actually start to see, in that commodity cycle we're going to see in the next coming year and a year and a half down the road, we will probably see that they will all do well, and some will do relatively better. And it will be more about the political agendas and trying to go in a green energy kind of way that will decide what is going to which ones will be the right ones for the pick. But and precious metal obviously because of the connection to the financial system and all that. So I think that those will be my pick.
Good answer. Henrik, I want to thank you for coming to my show. It was a great chat, and this is your first time in my show. I really look forward to host you at one point again, and let's do this more often. Thank you very much.
Thank you very much for having me on today.